How's it going, traders? On today's episode, I'll be talking about how you can use your technical tools in Confluence with price action to bang thousands of pips. Yes, you heard that right. How you can use your technical tools in Confluence with price action to bang thousands of pips. These are things or these are concepts a lot of traders struggle with. How to use the trend lines, Fibonacci, support and resistance to extract money from the live market. Most traders don't know how to draw trend line properly or doesn't even know how to use the Fibonacci, or they use trend line or one technical tool in isolation. Hence the reason price doesn't respect their technical tools. But today you will get to see how we use trend line in combination with one another. So yeah, um, I'm going to jump right into my market, into the screen, so we can start breaking the market down. We're using trend lines, support and resistance, Fibonacci, candlestick to ultimately extract money from the live market. Now, if you're joining us for the first time, smash the subscribe button, the bell notification. Why so? Because I will be taking you guys into the mindset of a profitable forex trader, right? I pride myself to be one of the most realistic forex trader here on the internet. I preach what works, not tell you best 5 hour strategy, best 2 minute strategy, best 1 hour strategy. All those nonsense will put money in your pocket or show you lifestyle content. All of those nonsense won't put money in your pocket. I analyze the market before the market play out. This way you get to see the thought process of a profitable forex trader before they place a trade. I'm going to give you 5 seconds to smash the subscribe button. JESUS. All right, thank you for smashing the subscribe button, and I hope you also hit the thumb button as well. And if you have a question, please drop it at the comment section. Best believe I will attend to your question. All right, let's jump into my screen. All right, in front of us we have gold. Gold is our first victim for the day. So what kind of trend is this? The first thing I do when I look at the trend or when I look at the chart is to identify the trend. As you can see, gold is bearish. So we have a high, we have a low, we have a lower high, a new lower low. The market came here, had several struggles around this area, and started pushing all the way to the upside. And currently, gold has breached. Not only has it broken above this major area of resistance of last week, we're anticipating price to bounce here to continue with the major trend, which is bearish. But what happened? Gold came and breached its major key level and also broken above its major trend line. So we've broken above a major resistance level and also we've broken above this trend line. So what does that mean for gold? What this means that we'll have an immediate trend moving against a major trend, right? This is an immediate bullish trend moving against a major trend. All right, I'm going to be very honest with you guys. A break of a trend line is not a change in market structure. This is where most of you get it wrong. A break of a trend line is not a change in market structure. Trend lines are technical tools. They mark out potential areas of price reversal. I think that again, trend lines are technical tools. They mark out potential area of price reversal, right? So a trend line is meant to reverse a pullback to continue with a major trend. So once price breaks above a trend line, what does that mean? It means we'll have an immediate trend moving against a major trend. Although that could also mean bullish consigns. In this scenario, this could also be giving bullish consign because we've broken above a major trend. But however, a break of a trend line is not a change in market structure. Principle of price action states in a downtrend, price should be creating lower lows and lower highs while maintaining the highs until this high is broken. Whatever is happening here is an immediate trend moving against a major trend. All right, so I just want to bring that to our notice. So now that we've broken above this area of resistance, it has now turned support and also broken above this key level. At this point, we can be looking for buying position all the way up here. Why? So this is an immediate trend moving against a major trend. On the daily time frame, you can see the proper breakout of the trend line, broken above it. So what are we anticipating? What are we doing? Is it time to start buying because we've broken above a resistance level or a trend line level? No, it is not time to start looking for buying position. We need price to pull back into this demand area. So we need price to pull back for a retest of this area. Once you pull back for your retest, a bullish candlestick bounce, I'll be waiting for a daily or a 4 hours bullish erection candle bounce. If I'm not too convinced with the 4 hours, I will need a daily bullish candlestick bounce from this area. Once you bounce off of this area, I'll be going to the 4 hours time frame to jump in on my trade. Once you bounce off this area, the next target for gold will be all the way around there, which is somewhere around $48,000 per ounce. I take that again. Wait for the pullback. Wait for your bullish candlestick bounce off of this area. It will not scale to the 4 hours time frame. The 4 hours time frame is where I come to execute my trade. And if you're following us for the first time, so once you pull back here and I see a bounce off of this area, I will draw my counter trend line. Because why? I don't buy at support, neither do I sell at resistance. Why? So because if you buy at support and sell at resistance, you're likely going to be prone to market manipulations and fake outs. A lot of you have been trading for quite a while now, will know what I'm talking about. Support and resistance area are very manipulated. These key areas are highly manipulated by the BFIs, the big financial institutions. So I will need price, when price comes close to a support area, a resistance area, I would love to see a candlestick bounce off of that area, or at least the manipulation around this area. Price comes into a stop loss on, then pull back above this area. Then I will draw my counter trend line. So I'm going to use previous price action to explain my entry criteria. So I'm going to draw my counter trend line at the waves like this, at the pullback, and wait for a 4 hours break. Once I see a 4 hours bullish engulfing candle break, then I will jump in on this trade. My overall target will be around this area, which is around $48,000 per ounce for gold. Why so? Because you can come in here, bounce, and start reversing all the way to the downside. Remember, the major trend is still bearish. This is an immediate trend moving against a major trend. So we can come in here. It's possible we can come in here, bounce, and start pushing all the way to the upside. So once we come in here, I'll be closing all of my position entirely as profit. In this scenario, we'll break above here, all fine and good. We'll come back, reanalyze the market, and how we can jump in for a buy position all the way up here. Until that happens, this is my overall target for gold. All right, that's it for gold. Let's look at something different. Let's look at something different from gold. Let's look at the sister of gold, which is silver. Let's look at silver. All right. Yeah. So silver, pardon me, let me clean up this chart so we get to understand what I'm looking at. If you notice, the chart for silver is very similar to that of gold. Both charts are almost the same thing, guys. All right, so let me have a naked chart so you can get to understand what we're talking about when it comes to silver. Okay. All right. All right, so silver, here we go. This is silver chart. Silver is also very similar to that of gold. We have a bearish trend pointing all the way to the downside. This is a high, a low, a lower high, a lower low, a lower high, a lower low. The market is currently pulling back, maybe to do a retest of here to continue with the major trend, which is bearish. Or maybe we'll come here, bounce off of this area to continue with the major trend, which is bearish. But in the scenario, we break above here, we can start pushing all the way to the upside. But as of now, silver is still bearish. And if I draw my trend line correctly, from the previous low to current price action, right? So what's next for silver? I'll be closing watching this. We came here, we started having sideways movement, WAP, and the market jumped back in. But so fast we're trading below this trend line, below this key level. I'll be looking for separation all the way to the downside, because it's possible we can come in here for a bounce. Probably let me adjust this properly to accommodate more touches. We can possibly come in here for a bounce, reverse here to continue with the major trend, which is bearish. The only time I'll be interested in going long for silver is if price comes and we break above here. If I see a proper break above here then I'll be interested in buying silver all the way up here. We also have a minor level somewhere around this level. So if silver breaks above this area, the next target for silver will be around this area. Although this trend line is here, so I'll be closing watching this. If we break above here, I'll be looking for buying position all the way up here for silver. Take that again. If silver comes break above here, I'll be looking for buying position all the way up here. Either we'll bounce here to reverse, or we'll bounce here to reverse. So my criteria for entry will be break above here. I'm looking for a proper breakout, a retest, a bounce of this area. I can start buying all the way up here. Once price comes in here, I'll be locking in all of my position. Why? So because we have this trend line around this area. And if I bring up my Fibonacci, it's one of my favorite too, from swing low on John to the current price action, you will realize that the 61.8 Fibonacci level came in confluence with this minor level somewhere around here, and the 50% Fibonacci also came in confluence with our trend line. Fibonacci are retracement tools, they are technical tools, and they mark out potential areas of price reversal. The most potent reversal level are the 61.8 Fibonacci level and the 50% Fibonacci level. Notice how the 61.8 Fibonacci level came in confluence with our resistance, with our normal resistance and our trend line resistance. And also the 50% also came in confluence with our trend line resistance. So if price comes and break above here and our entry criteria are met, and I start looking for buying position, one price comes in here above these two levels, I'll be closely monitoring how the market behaves around this level. Why? So because we can potentially bounce here to continue with the major trend which is bearish, or we can equally come here, bounce here to continue with the major time frame which is bearish. So as of now, it is not time to start looking for buying and selling for silver. Why? So the market is too close to a resistance level for you to be looking for a buy or sell. Once price is too close to a resistance level, you want to chill and allow the market to decide what it wants to do. Although it's possible we can pull back here for a retest, bounce off of this area, start pushing all the way to the upside. So I'm anticipating silver at least pull back into this level, a bounce off of this area. We can start buying silver all the way up here. One price comes in here, I'll be locking in my first position in anticipation. If we break here, the next target will be here. I think that again, once we pull back into this level for a bounce, and my criteria for entry are met. I see bullish candlestick bounce here, a break of my counter trend line. I will jump in for a buy for silver. At one price, my first target will be all around this area. One price comes in here, I'll be closing out my first position entirely as profit. Then push my stop loss past break even, anticipation that if we break above here, the next target for silver will be all the way into either this trend line or around this area. But for now, for silver, there are no opportunity for silver. Sit on your hands and allow the market to decide what it wants to do next. Now let's look at the opportunity for us to trade for the upcoming week. This one is very juicy and it's very ripe, and I see no reason as to why we shouldn't be on this trade. This video was supposed to have come out, was supposed to premiere yesterday, being Monday, but yesterday I just had a flu and I was very tired, feeling very sick. I couldn't drop the video, hence today the video has to drop this night. So by Tuesday you get to use the analysis, also make money for the upcoming week, for the week, so to say. Yeah, so tired this. I just came down with a heavy flu and I was too tired, feeling very sick. I couldn't do the video and I just had to sit on my hands, but today I'm feeling a lot more better. So yeah, let's jump into the video. What can I see here for NZD USD, NZD AUD USD? The Aussie New Zealand pair has been consolidating for quite a while. On a daily time frame, we form what they call a double top. This is a double top. This is the first top. This is a second top. Double top are bearish reversal sharp pattern. They can reverse a trend from being bullish to being bearish. And this is the neckline of the double bottom. Take that again. This is the neckline of the double bottom. This was the first top. This is the second top, and this is the second the neckline of the double bottom. Notice how price came here. We tried breaking above the neckline. We rejected. We tried pushing all the way to the upside. We also rejected. We tried again, rejected, and there have been several rejections around this area. Now on the daily time frame, we can see the market has built a case as to why it may want to reverse all the way to the downside. There was an attempt to violate. There was an attempt for the double top to be invalidated, but what happened? The market looks like it's now ready to start reversing all the way to the upside. Now, from an intraday perspective, this is a bearish trend. This is a high, a low, a lower high, a lower low. The market is currently coming back to do a retest of this area, and you can see this is the first top. This is second top, all right, and the second. This is a first top. This is a second top. This is a double bottom also occurred at the major area of resistance, which also came in confluence with our trend line. So we have trend line, we have trend line resistance, normal resistance. We also have a reversal sharp pattern. All three coming in confluence, giving us an optimal reason as to why we should be looking or anticipating a sell all the way to the downside. And if I bring up my Fibonacci from recent low to recent high, you realize also came in confluence with the 50% Fibonacci level. So we have the 50% Fibonacci level also coming in confluence with all three of our technical tools, giving us an optimal reason as to why we should anticipate a reversal to the downside. So what I'm anticipating for is even on the second leg of the double bottom, the double bottom, the market also give us another double bottom again. This is the first top. Sorry, double top. Even on the second leg of the double top, the market also gave us another double top. This is the first top, and this is the second top. You can see this month, Monday candle kind of closed bearish, engulfing 2 days of trading. Just tells you, look, as a strong selling pressure coming up from this area, we should anticipate a rollover all the way to the downside. So you can see this clearly for the first top, second top, broken below the neckline. Remember, we don't sell at the break of the neckline, guys. Never sell at the break of the neckline. All right, so what are we looking out for? I can see a break of the neckline. Market has pulled back for a retest, fake out, do a stop loss on, and it looks like the market wants to roll over to the downside. I will need a 4-hour candle to close bearish. Once I have a 4-hour candle close bearish, I will be on this trade. I'll start looking for a selling position all the way up here, all the way down here. When price comes in here, I'll be locking in my first position entirely as profit. Maybe I'll close out my position entirely as profit. Why so? Because this is a range. In all truth, the market is currently just moving sideways. This is a range. So if we break below this area, all fine and good, then we have all this space to work with. So when price breaks bounce here, I want to come in here, I'll be locking in my position entirely as profit. Sorry, my chart didn't load properly on the daily time frame, hence the reason you're not seeing the breakout from the daily time frame. My chart didn't load properly on the daily time frame. So once we bounce here, once we break out from here, I'll be selling all the way down here. When price comes here, I'll be closing out my position entirely as profit, because we can also ultimately bounce here and start pushing all the way to the upside. You have to understand this, the market is currently consolidating between this high and this low. It's possible we can come here, bounce and start pushing all the way to the upside, but I doubt that will be the case. If we break below here, it's a sell for me all the way down here. So we'll have all this space to work with. But don't worry, if we break below here, I'll be coming out making the next video on how we can actually jump in for a sell all the way to the downside. Let's look at the S&P 500. The S&P 500 will be anticipating a pullback for a retest of this area. Let me zoom out properly. You have to understand the S&P 500 is bullish. So this is a high, this is a low, a high, a higher low, a new higher high, a higher low, a new higher high. This high is not really convincing, but this is looking like a new higher high. We've broken above this. When the market came in here, we'll be anticipating at least a pullback, a reversal all the way down here, bounce off of this area, to continue with the major trend, which is bullish. But what happened? We had a double top. The market came to the neckline and bounced and start pushing all the way to the upside. This just goes back to state what I stated earlier on in my previous video, that chart patterns, regardless of the time frame they occur, they can be invalidated. Yes, a sharp pattern that occurred on the higher time frame have a high probability of playing out, but regardless, sharp patterns, regardless of what time frame they occur, they can't be invalidated. Once we came into the neckline, I told you guys we start seeing some bullish candlestick play around this area of the neckline. So this was the first top, second top. What happened? We have a bullish bounce off of this area. The market just jumped back up, and it looks like we want to continue pushing all the way to the upside. So what's next for this guy? I can see we've broken above the range. We are currently pulling back for a retest of the range. We don't buy the breakout, so wait for price to break out, pull back. I will need a 4 hours bullish engulfing candle bounce off of this area. Once we break above this area, once I see a proper break of my counter trend line, trust me, I will be in on this trade. My first target comes somewhere at the 100% retracement level. Once price comes in here, I'll be locking in my first position entirely as profit. Then push my stop loss past break even. Anticipation will just push all the way to the upside. Now let me just take a little bit of a trick. There is an analogy that goes like this in the financial market, that whenever the market consolidates for a while, right, the amount of pips we did while we were in the range, right, will likely be the amount of pips we would do when we break out of the range. While we are consolidating between this high and this low, the amount of pips we did between this high and this low will likely be the amount of pips we would do when we break out of the range. So if I'm going with that principle, the next target for BTC will come somewhere around 49,000 basis points, if I'm being honest. But again, nothing in the financial market is an exact science. The financial market is not a simulator or a video game, so you have to have at the back of your mind. Nothing in the financial market is an exact science. All right, so one price comes in here, I'll be locking in my first position entirely as profit. Then I will push my stop loss past break even. Anticipation, I will push all the way up here, right? Yeah, so wait for a proper break. So wait for price. Wait for price to break above here. Once we break above here, we can start buying all the way to the upside. Okay, that's it for the S&P 500. Let's look at BTC. BTC, as of last week, the previous episode, we are anticipating a push all the way to the upside. That has happened for BTC. Well, our analysis actually played out, but we didn't jump in on this trade. Why? So our criteria for entry was not met. I'll be the first to come out and tell you guys why our criteria for entry wasn't met. All right. If you've not watched the previous episode, please go back and watch the previous episode to see why we were anticipating a reversal for BTC. BTC was bearish until we came down into this level. Let's use the weekly time frame. So this is a high, a low, a lower high, a lower low, a lower high, an equal low. This low is not significantly lower than this. This is an equal low, occurred at a major area of support. This area, which also came in confluence with our trend line. So double bottom means reversal all the way to the upside. Once we had this double bottom, we were anticipating a push all the way to the upside. The market was playing around this area for quite a while, and I told you guys on the previous episode, whenever BTC wants to make a massive push all the way to the upside, either it wants to pump or dump, it always come into a key level, play around that key level, track around that key level before making a massive move. And we also use previous price action to explain how this happens. If you look at the previous price action around this level, one BTC came around $125,000 per coin. This is the weekly time frame. So one individual candle represents 1 week of trading. It took the market several weeks to coil around this area, play around this area before making a dump. If you notice, when BTC also came here, it also have similar price action behavior. It took several years to play around this area before making a massive move all the way to the upside. This is what they call accumulation. Investors, we are buying in anticipation. Once the push happened, they'll make a lot of profit. And what happened? The market has pushed all the way to the upside. So what's next for BTC? BTC has broken its bearish trend line. We're currently pointing all the way to the upside. The only time I'll be interested in buying, going long for BTC is if price comes and I see a proper break above here. Then I'll be interested in going long for BTC, because it's possible you can come here, bounce here, and start reversing all the way to the downside. All right. Although I can see a minor level somewhere around this level. Alright, so I'll be closing watching how the market play. Maybe if you pull back here, I start seeing some bullish candlestick play around here, I'll probably jump in for a buy. But to be on the more safer side, this market is just in a push phase. It's just pushing all the way to the upside, guys. It's possible you can consolidate a bit around this area, play around this area before making a massive move. But the only time to be on the more safer side, wait for BTC to break above here. If you break above here, we can start looking for a proper buy all the way up here for BTC. All right, that's it for BTC. Any other currency pair we might actually want to touch? For now, no. All right, so that's it for today's episode. I hope today's episode has been eye-opening. I'll catch you guys in my subsequent video. If you have any question, please drop your question at the comment box. Trust me, I will attend to your question at the comment box. I'll catch you guys in my subsequent video. Peace and love.